With so much news, it is Liberation Day, as it's coined, Guy, and we got a list of tariffs. So what do we make of it? We saw the market reaction. No surprise, lower in the after hours so far.
No surprise. Now, the day actually sort of made sense to me. Market route, we talked about this sort of yesterday. Personally, I thought there'd be sort of a pullback, not as draconian, not as robust. The market would like that. We would continue to rally. The bond market would sell off. To a certain extent, we saw that during the day. Obviously, a lot of things have been reversed now. So what do you try to make of this? Well, Treasury Secretary Bessent and President Trump have asked for lower rates in terms of 10-year. Announcement like this might get them to lower rates. The question is, at what cost? That 5,500 level in the S&P clearly is going to start to come into play again. But, you know, secretly, I wonder myself, have deals already been in place, despite what they say about we're not going to negotiate, you can't call us, or things in place where a week or so from now, there's countries at the White House or the Rose Garden that are acquiescing, and there's some sort of detente in terms of what's going on. So maybe this is sort of act 2 or 3 in a 5-act play.
Yeah, I think the debate, and a lot of folks have been talking about this, is this policy or is it politics, right? And so at the end of the day, it's kind of what Guy's just talking about is like, are they going to take the calls to your question? Are they looking to do deals? And, when I think about how targeted some of these tariffs are and how basically, whatever they come back with, these countries that are being targeted, a lot of these are really in Trump country. If you think about it, they're in red states. You think about what happened with farmers going back to 2018, the trade war. I mean, they collected tariffs. They collected tens of billions of dollars in tariffs from farmers. And then you know what they ended up doing? They ended up giving it back to them in relief, So you're going to do that to the auto workers in Michigan. I mean, the list goes on and on. So at the end of the day, I'm probably more in Guy's camp that, they're talking a tough game here. I think they probably want to do some deals. A lot of these countries are going to come to the table and say, we're going to do this, we're going to do that. And they probably won't end up doing them, So at the end of the day, I think it's one of those things where maybe they're focused on the yield. I think they're going to have to get focused on the stock market pretty soon.
We were talking about certainty and whether or not we have any more certainty. As Megan had mentioned, even though we know these country-specific and the baseline tariff regime that we will operate in, we don't know the sector-specific ones, such as on pharma, which will face tremendous tariffs because many of the raw materials come from China. We won't know semiconductors, which also will probably face some pretty stiff tariffs.
True.
But we do know for autos, we saw a turnaround in the after-hour session. Somewhat. GM was down as much as 3%. It's now down 1%. You're pointing out also the Mexican peso.
Yes, and that was sort of, I actually rallied a little bit. I don't know where it is right this minute, but I think, do we have certainty, not on the things that you said? Yeah. Do we have certainty on what the worst case scenario is? I think we do. I think this is the biggest tariffs we would see. I agree with both Guy and Sunshine Dan that it is very possible and probably more than 50% likely that we do see some movement there. It's interesting after the first round of tariffs going years back, how there was such a push to leave China manufacturing, go elsewhere, go to Vietnam, go to Thailand. Well, okay, so that's sort of been thrown into flux. I think, you're right to see the 10-year, could the 10-year come down and inflation go up? Both of those things seem likely. So that's sort of interesting. And I think, so who does it benefit? I think it benefits a Walmart over a Target, but doesn't absolutely benefit either of them. So if you've got power, you're going to be relatively better off, but not better off than you were yesterday.
I'm not the desk statesman, so me trying to parse whether this is going to be policy or politics, as Dan stated, I just think for me it's probably over my head and outside of my level of interest. What I am concerned about is how this is likely going to affect the stock market and what is Trump's willingness to affect the stock market. And I think here we have seen that this is probably worse than the worst case that was modeled in. And so even if we do start to see some reprieve from what the levels that have been indicated right now, what is likely going to be the stock market response? I think any presidential put, I think you might at least want to rethink whether that is actually in play. And if you are, in fact, getting a lower 10-year yield or 7 to 10-year yield because of lower growth expectations, I think you also want to think about how we're arriving at said destination point. I will say, yes, across the board, you've got a mix. We thought perhaps maybe we're going to get one sweeping tariff level, or perhaps you're going to get, but we've gotten a mixture of both, which I do think, I do think my other panelists are making a strong point in terms of them kind of kitchen sinking it. However, given his reluctance to pull back, despite what we have seen in a weaker stock market, tells me that perhaps he is a bit more emboldened than we're giving credit for being.